Good afternoon, ladies and gentlemen. We live in times when global uncertainty is no longer an exception. It has become a constant backdrop. Around the world, we see a combination of slowing growth, geopolitical tensions, and shifting economic priorities. The US is a weakening superpower. Europe is struggling. China, which was once the engine of global demand, is navigating a real estate crisis, demographic headwinds, and a declining appetite for global integration. Extreme climate events are adding to the geostress, two active conflicts, and a rewiring of global supply chains, and a world that is recalibrating the very idea of globalization. In short, the world today feels riskier, more fragmented, and harder to predict. And in this global setting, India is coming across as an oasis of stability and opportunity. At a time when most major economies are facing weak growth and high inflation, India is consistently delivering robust domestic consumption, strong financial system, improved corporate balance sheets, and government spending on infrastructure. We are witnessing a transformation in the way Indians save and invest. We are seeing more and more of household savings moving towards financial assets. And it is a theme we are continually seeing unwind in front of us at Capital League. This combination, global uncertainty and a resilient India, has created a unique window of opportunity. Of course, markets won't move in a straight line. There will be issues of inflation, valuation, elections, and so forth. But India today is better placed than any time in the last 2 decades to leverage these opportunities. So in this context, a world full of prosperance and an India that continues to deliver, we come to today's topic of discussion: Indian opportunities among global uncertainties. Anish, I start with you. So let's look at the global picture. US, very high debt, high inflation, weakening dollar. Europe, anemic growth. US-China recalibrating their relationship. Global supply chains being reset, China +1, Europe +1. In this context, how do you look at the global macro risks, their impact on India, and what are the key challenges and opportunities that you've seen?
So, Sapna, I always say that the global topic is very interesting and we can have a very good discussion on it, but it's extremely irrelevant. So I'll come to the interesting part. See, let's start with the US, right? So what the US is trying to do is actually impossible. It's unattainable, right? On the one hand, they say we want to attract investment, and on the other hand, they say we want to reduce our trade deficit. Now, actually, this is mathematically impossible because there are two sides of the same coin. A country that attracts investment, by definition, if you receive capital inflows, by definition runs a current account deficit. So what they're trying to do actually makes no sense. And as I say, actually being able to run a current account deficit is actually a privilege, because that means people are trusting you and investing in your country. And the way the US is behaving, they might lose the investor trust. That's actually already happened in the UK. If you see what's happening in the UK, people are worried about their financial stability, their bond yields are rising. That's because people are losing confidence that the UK economy will be managed properly. And it's not inconceivable that the same thing happens to the US. Now, the interesting thing, all of us feel investment comes from the US. Actually, that is a very big misconception. The US is not the source of funds. US is only a financial intermediary. I always say that the US is actually like a hedge fund. If you see, the US is a net borrower, they're a net recipient of investments. The source of funds is actually China, Japan, Germany. These guys run surpluses, which they invest in the US. A lot of them buy US government bonds. And then the US, provides the US the funds which they invest in other countries. So it's a bit like a hedge fund. They're borrowing at 3% and investing overseas at 10, 15, 20%, right? Now, and the Chinese have realized this. So this whole Belt and Road initiative is them saying, oh, why should we buying US government bonds, earning 4% on them, and these guys going out and building mines and earning 20% returns in the US. So I do think that this system will change. As I said, it's very interesting, but it's not really relevant.
Like to hear that.
Right? Because we can. I almost feel there's an oversupply of economists in the country. So we keep up picking up topics to discuss. But frankly, it's not really relevant. Like, see, for India needs to grow. India, in good times, runs a current account. We achieve a savings rate of 34-35%. We attract 2% foreign capital. So when we achieve when we are investing 36% of GDP, only 2% is coming from the US or from foreign capital. We need to focus on the 34% and making sure we can mobilize that for growth. Now the second side of it, because you have to look at it in two parts. I talked about the funds flow side. The second part is, okay, if the global economy is weak, where will we export? True, if we export less, there will be weaker export demand, but you can always compensate that by stimulating domestic demand. So rather than producing for exports, you produce for domestic consumption. So what matters is that we run the domestic side of the economy well. I actually think this whole trade issue is a huge distraction. It makes very limited impact on the economy. If we run the domestic side of the economy well, it's fine. And on this trade thing also, I say, look, why worry about tariffs? We should apply export tariffs on software services, on pharmaceuticals. Why are we supplying such cheap medicines? Our companies are competing and giving away giving products so cheap. If we applied an export duty, we will collect the tariff, not the US, and there is no other source of IT services at this scale. There is no other source of pharmaceuticals at this scale. It really is not an issue. That's why they've not been able to impose tariffs on software services, on pharma. Yeah, they've imposed tariffs on textiles. It's a very small part of the economy. It really doesn't matter.
So Prateek, coming to you. So we've heard foreigners or US flow is irrelevant, but still liquidity matters. So coming to foreign portfolio investors, FPIs have pulled out something like 3.5 lakh crores from the Indian equity market, bringing the net FPI position to something like 16%, the lowest it has been in decades. And issues given are of valuation, better opportunities in other Asian countries, rupee is weakening. So how do you read this overall situation, and do you see any initial signs of reversal of this trend?
So to start with, Delhi है, हिंदी चलेगी?
बिल्कुल चलेगी.
So when I came here, मुझसे पूछा गया how will various people be? तो मैंने कहा ICICI का बंदा है, उसके थोड़े अलग thoughts होंगे. Okay. Now the first line he says, मैंने कहा यार यहाँ पे भी thought मिलते हैं. नहीं, so FPI, देखिए हमने FPI का थोड़ा एनालिसिस किया था. जो हम करते हैं वो नहीं करते, lot of them. Okay. So I don't know if the other two guys agree with this, but we slotted FPIs into 4 varieties. And as you understand, you will find that X of one small variety, जिसको valuations का कोई फर्क पड़ता है, बाकियों को नहीं पड़ता. तो जो पहली वैरायटी है, वो डी फैक्टो हमारे आर्बिट्राज फंड जैसी है. वो स्टॉक खरीदते हैं और फ्यूचर बेचते हैं. 6.5-7% कमाते हैं, उनके फ्यूचर पे टैक्स नहीं लगता है. Now, as long as they are making more money versus wherever else they can invest, risk-free, adjusted for rupee volatility, hedge basis, they will keep coming. तो आप देखोगे बाहर US की yield ऊपर के बेफालतू के हमारे यहाँ सेलिंग आती है, वो इन लोगों की आती है. जब ये लोग बाई करते हैं, इट इज मोर इन दी F&O पार्ट विच इज देयर. तो आपको लगता है कि भाई हमारे बैंक बहुत बढ़िया हो गए, IT सर्विसेज बहुत बढ़िया हो गई, क्योंकि दिस इज वेयर यू एब्जॉर्ब अ लॉट ऑफ मनी. 2 चीज इनके लिए इम्पोर्टेंट है. व्हाट इज द यील्ड आउटसाइड, हमारे यहाँ 6.5-7 रहती है आर्बिट्राज, एंड रुपी स्टेबिलिटी. दोनों में से कुछ भी खराब होगा, आप देखोगे ये जंतु बाहर जाते हैं. दूसरा हमारा टाइप ऑफ एफपीआई है जिसको हम हेज फंड बोलते हैं। तो पहले वाले को वैल्यूएशन का कुछ नहीं करना है। दूसरा वाला जो है उसने वैल्यूएशन को ओवरकम कर दिया। वो क्या करता है, जो उसको अच्छा लगता है वो खरीदता है, जो उसको बुरा लगता है वो बेचता है। ठीक है, तो हेज बेसिस पे वैल्यूएशन कैंसिल हो गई एंड देन ऑन टॉप ऑफ इट ही इज लीवर्ड। तो एक हमारा थॉट आ जाता है कि भाई दीज गाइस आर बोरोइंग, तो इनने जापान से बोरो किया होगा। अरे भाई जापान का 30 साल का यील्ड चेंज हुआ है, एक महीने की एक्सपोजर के लिए कोई 30 साल का शायद बोरो नहीं करेगा। बट एनीवे, नाउ फॉर हिम this kind of a guy who is levered and doing his bit, buying what he likes, selling what he doesn't, रुपये की स्टेबिलिटी बहुत ज़्यादा जरूरी है। See, more than any borrowing cost change, borrowing cost change of 25 bips, 50 bips is per year. But if rupee depreciates by 1.5% in a day, on a levered position, he has to close books. और फिर आप देखोगे कि जब ऐसा होता है तो बाजार एक आपको बहुत बढ़िया सिग्नल देता है। See, the part which is falling then is the part that these guys were positive on in the first place. Okay, so wait for the currency to stabilize, in the same part. तो इसको भी फर्क नहीं पड़ा, ये छोटा जंतु है। तीसरा जंतु है जो हम कहते हैं ये सॉवरेन, साड़ियाज, पेंशन्स ऑफ द वर्ल्ड। They give a manager money for his alpha. ओके, पीछे से MSCI इंडिया शॉर्ट करके बैठते हैं, तो इनको भी वैल्यूएशन का कुछ नहीं करना पड़ा। चौथा वैरायटी हमारे जैसी है कि भाई इंडिया की ग्रोथ स्टोरी अच्छी है, इंडिया की कंपनी बढ़ेगी, प्रॉफिट बढ़ेंगे, वैल्यूएशन बढ़ेगी, तो उससे पैसे कमाएंगे। उसमें भी देयर इज अ ग्लोबल फंड जिसमें इंडिया का एक्सपोजर 3 से 4% होता है 10 कंपनियों में। तो उनको इनफ्लो आता है तो हमारे को इनफ्लो आता है, उनको आउटफ्लो होता है तो हमारे से चला जाता है। इंडिया फंड होता नहीं है, हमारे जैसे ही हमारी दोस्त है। तीसरा हो गया इमर्जिंग मार्केट फंड। इमर्जिंग मार्केट फंड एक जंतु है, सिग्निफिकेंट है, जिसको रिलेटिव वैल्यूएशन से मतलब है। तो अब अगर आप देखो तो साल के बिगिनिंग में यू आर सेइंग इंडिया इज लुकिंग एक्सपेंसिव, सारे लोग बोल रहे थे on long period averages versus other emerging markets we were looking more expensive. अब पिछले एक साल में ये तगमा किसी और ने पहन लिया, अब हमारे पास नहीं है। So US probably is the most expensive market. चाइना 32-33% चल चुका है, हम नहीं चले हैं, तो हमारी रिलेटिव वैल्यूएशन अब चेंज हो गई है। नाउ मोस्ट पीपल से कि वी आर एट लॉन्ग पीरियड एवरेजेस। तो अब अगर हम वेरियस एफपीआईज को समझ चुके हैं तो आप सोचो, जिसको रिलेटिव वैल्यूएशन का पे फर्क पड़ता था साल के शुरू में, अगर वो $100 लेके जा रहा था तो आज के दिन तो भाई 25 ही लेके जाना चाहिए। थिंक ऑफ देम एज लीकिंग बकेट। ओके, देयर इज नो मनी कमिंग इन। अगर आप यूएस में होते और वन ऑफ द मैनेजर, रिलेशनशिप मैनेजर वुड हैव वांट टू speak to them, today emerging markets don't have a story. US is the best performing market globally. US guys don't like a Russia, they don't like an India, they don't like a China, they don't like a Brazil. Nothing much is left. So think of it as a leaking bucket. ठीक है, तो थोड़ा आउटफ्लो तो मान के चलो, पर जो आपने साल के शुरू में देखा उससे कम होगा, क्योंकि रिलेटिव वैल्यूएशंस हैव चेंज्ड। 1, 2 उससे कम होगा क्योंकि जो साल के शुरू में यूएस की यील्ड 4.5% से भी ज्यादा थी, अब 4 के आसपास हो गई। ठीक है, उससे कम इसलिए भी हो सकता है क्योंकि रुपये की डिप्रिसिएशन काफी जोर से हो चुकी है, और एक्स ऑफ इवन अ ट्रेड डील यू शुड एक्सपेक्ट इट टू नाउ स्टेबलाइज। तो जो दूसरा जंतु है वो भी शुरू हो जाएगा। सो दैट इज व्हाट द केस इज कि एक तो दे आर, लाइक माय फ्रेंड सेज, गेटिंग लेस रेलेवेंट, क्योंकि उसमें भी एग्जाम्पल है पहले का। आप चाइना देखो, इनने ये जो बात की, मतलब सेलिब्रेशन है, वेस्ट डजंट हैव मनी, वेस्ट इज अ बोरोवर, ईस्ट हैज मनी, वेस्ट हैज मार्केट कैप, वो फर्क है। ठीक है ना। तो चाइना 2008 के वर्ष में the same FPI used to give money to China, which is why हमारी गर्दनें टेढ़ी हो जाती थी. चाइना गिरा, हम गिरे, हांगकांग गिरा, पाकिस्तान गिरा, यूरोप गिरा, फिर यूएस गिरा. जो ग्लोबल साइकिल हुई थी, आज के दिन वैसा नहीं होता, क्योंकि चाइना शायद दुनिया का सबसे बड़ा FPI बन गया. अब अगर हम सोचे हम उनसे कितने साल पीछे हैं, कोई भी साल ले लीजिए, 15 साल, 20 साल, we are starting to experience what Chinese have already experienced. The domestic surpluses are so large, the story is there and it is not stoppable. जो आप आज के फ्लो देख रहे हो बाजार में, आई थिंक वो ब्रेक लगे हुए फ्लो है. वो हम डेटा भी वो दिखाता है, आप के क्लाइंट भी वो बोलते नहीं अभी मूड नहीं ठीक करा, 1 साल मार्केट नहीं चली है, अच्छा नहीं लगा, लेट्स होल्ड अ बिट. डेटा में दिखता है. If sentiment improves, it will improve much more. Potential is much more. So focus to India that way is getting. It was always more domestic on economic side, even on financial side where there were linkages globally. Linkages will remain, but the effect will reduce. It is not like how it was earlier. So मेरा simple सा है कि, and plus of course US will start again expanding balance sheet. They may cut rates more. All of this points to expectation of reduced selling. उसको पकड़ के चलिए. इसमें बस 1-2 चीज़ें और ऐड करता हूँ तो थोड़ा सा मार्केट का वो हो जाता है. आप डिमांड सप्लाई ऑफ पेपर देखते हो तो अक्टूबर में वी हैड अ ह्यूज 39,000 crore फंड रेज फ्रॉम द मार्केट. तो उतना पैसा बाजार से गया. नवंबर में उससे कम IPO, QIP एक्सेट्रा एक्सेट्रा नवंबर में उससे कम है. दिसंबर में इसके बराबर होगा या थोड़ा ज़्यादा होगा, बट basically this is the near term hump. Over a period of time another hump will come. FPI, we just made a case, slightly lesser selling. Domestic, we all understand we are holding back. So if sentiments improve, you will see a much bigger net. इसमें गोल्ड एंड सिल्वर जहाँ पे पिछले महीने 15,000 करोड़ गया, वो अटक जाए तो यूजुअल द मनी दैट गोज इनटू गोल्ड एंड सिल्वर इज 3,000 crores. 12,000 extra went. Now, I don't think you are asking anything on gold. Good, no. Right?
I think we'll move.
So it is a past topic.
Yeah.
It's a past topic. So
we'll come to that later. Yeah.
Which then means कि money for equity may just be higher. तो जो demand supply of paper है वो मेरे को लगता है कि अब slightly it's all on the margin getting more positive.
Good. So we more or less established that foreign investors are not that important in today's India. But coming to you, Tahir, one topic in the global context that gets talked a lot about is artificial intelligence. It's having a global impact, right from AI-related stocks driving up the entire US market. And very recently, Michael Burry shorted NVIDIA. Michael Burry, just to share, was one of the first persons who shorted the US housing market in 2008 when the global financial crisis started. A lot of people are saying that the US markets are in a bubble, and very recently RBI had come out with a statement, I'll just quote. They said that surging equity valuations abroad may be outpacing fundamentals and could eventually threaten financial stability. So what is your perspective?
Well, first off, let me start by thanking Capital League for having me over, and this wonderful group of women who are doing a fabulous job out here, and almost a quarter century of some amazing work. So thank you very much for having me here, and more power to you guys. Well, to your question on AI, so I know it is a burning question, and it is something which is at one level I'm starting to educate myself on this, and I'm sure many of us in this hall here or this garden out here are probably trying to educate ourselves as well. And it is something which is quite a big inflection point, not just from a technology perspective, but also in terms of our overall life conduct. This is the closest that we have come in terms of technology where it is starting to emulate, humans, right? I mean, so that actually makes it a lot more riskier or something lot more intricate and something which we all need to contemplate about as to how this is going to unfold over the next quarter of a century or so. Up until now, whatever technological revolutions we've had, they've not necessarily actually taken away the human element into consideration. But this is one which is actually disruptive to that extent. So I think it needs a little more consideration. And therefore it's important that we educate ourselves as much about it as possible. It's evolving. A lot of investments, of course, are getting into this area. Attracting investments almost close to about $500 billion a year by the group of these 7 odd companies. It's almost driving an incremental 100 basis points of growth in the US market, which is used by these standards. So I think we have to realize that this is something which is receiving a lot of attention, and now it's not just the Americans, it is even the Chinese who are equally at it, and obviously they are taking it to a next level altogether. So there is this disruptive force which is there. It is going to touch our lives and it's going to make everything different, whether it is about running our daily lives or whether it is even about investing and everything else. So I think importantly, to my mind, I don't really think this is something which is going to go away very soon. It might probably take a pause. It is being given a perception of a bubble, which perhaps depends on how you look at bubbles. Bubbles are of different types. Like for example, if you were to look at the global financial crisis, you mentioned the housing bubble at that point in time. Bubbles, when they are predicated on financial products, are generally more vulnerable to bursting, and more so because financial bubbles actually can traverse. They don't see barriers. There are no physical barriers to it. It can travel from a US to an India or to a China to a Europe very easily, because there are always domino effects which are at play as far as financial products are concerned. Exactly. But what is different with technology bubbles is that at one level it is also this, that technology bubbles typically create some value at the end of it, even if the bubble bursts. So if you would probably go back to 2001, 2002 when you saw the dot-com bubble, or the internet bubble for that matter, and there were companies like Netscape, etc., which were obscenely valued at that point in time. But 25 years later, we are sitting with a technology which is really very powerful and has benefited all of us, mankind out here, right? I think something similar is probably likely to happen in the case of AI as well. We will have technologies which don't do anything. Like for example, a few years back, I remember just around 2020, in and around COVID, we had the whole virtual reality boom which was happening as well, but it didn't really lead to any exciting results. The usefulness of that application did not really come about. But that's not the case with AI. AI is actually, as many describe it, it is coming to a stage where it is at the threshold of usefulness, and that actually invites a lot of money. Once you reach that inflection point where you believe that this is something which is very serious and can have day-to-day implications, and you will be able to use this in day-to-day life. Use cases are developing, whether it is weather or whether it is robotics or whether it is even just understanding how to invest, or probably even things like how to service in the service industry, how to probably use AI in areas like airlines or hospitals and so on. I think all those use cases are clearly developing, and people are trying to make it more and more perfect. So point is that, in my view, I think this is something which is a wave. It will probably have its
ups and downs,
periods of maybe a little bit of cooling, but this is something which is central. And from an investing standpoint, and more particularly from an India investing standpoint, I think we need to get into the middle of that. Today we are somewhat at the fringes, if at all, as far as AI is concerned. So I think India will have to find its way. Today India's strength as far as investing is concerned is that it offers a lot of diversity. So yes, there is an element of overvaluation, or the US market we can say is very top heavy in terms of the top 10 AI technology related firms occupying maybe 50-60% of the market, top 100 companies accounting for maybe about 75% of the market cap out there. But then they are growing. I mean, this is the first time after a long time that we are seeing that there is somebody who's challenging India's growth. India has always been thought of to be a very unique high growth market, and still is in a way. I mean, fundamentally we still are in an embedded fashion. we've lost a little bit of our way in the last some time, but in that period we've had, some of the other countries were actually delivering much better growth and probably a prospect of that growth continuing for longer. And that is, to some extent, I would think, is also the reason why some of this capital has actually got
So not
attracted.
too much concern about the AI issue?
I would like to think that it is. We still have a lot of domestic drivers as we've discussed, and there is at some level a detachment, but we can't be fully distanced from that reality. We'll have to make sure that therefore I keep saying that the last point that we are truly Atmanirbhar at this stage. We have to make sure that we invigorate as many of our domestic levers in order to make sure that we are right up there in terms of the attractiveness of growth.
Okay. So now we come to our internal growth drivers. Anish, to you. So we have domestic consumption, we have capex, we have our demographics. There are lots of internal engines. So I want to ask, what happened over the last 1 year? We saw demand slowing down. We saw the economy weakening. We saw downgrades in corporate earnings. With all these positives and internal growth engines we've spoken about, can you elaborate? What happened?
See, in any slowdown, what happens when you say there's the economy is soft? You're actually saying that look, demand is less than capacity, right? So factories are lying idle, they're not, and a boom is the opposite. A boom is when demand exceeds capacity. So factories are fully utilized, people are running 3 shifts, they don't have time to take maintenance shutdowns. So let's just understand what is a demand, what is a boom, and what's a slump. And a slowdown is a mini slump. What happens is, there's no point diagnosing why it happened. But because it creates a vicious cycle. Why does a demand slump happen? People, for whatever reason, may become cautious. They might say, oh, I'm not feeling so good about the future. When you become cautious, what will you do? You'll cut your spending. Now, one person's spending is another person's income. So when some people cut their spending, other people cut, income falls. Their income falls, they also cut their spending. So that creates a vicious cycle. Now, it's irrelevant why it started. You get my point? Why did I say it's irrelevant why it started? The solution is very simple. The solution is you need to create demand. And you do that, it's the RBI and the government does that by saying, okay, people are worried. The RBI does that by reducing interest rates. Saying,
Are there some key issues that come to mind? What could have impacted the slowing of
so what started it? So a lot of spending across the board slowed down.
Okay.
Right? Now, when it slowed down across the board, I wouldn't hesitate to say this was the starting point, this happened second, this happened third. It's irrelevant.
Ripple effect.
Yeah, right? It's like whether you cut your spending first or Tahir cut his spending first is irrelevant. The point is Tahir cut his spending, you also cut your spending, and then things slowed down. So, sorry to pick on you. So the point is, the solution is very simple. The government, like you say, okay, people are worried about, and what happens as a result is, people cut their spending trying to save more. But I don't know how many of you remember your economics classes, there's something called the paradox of thrift. People try to save more, but their income is false, so they end up saving less.
Okay.
Right? Because your income is dropped, now you have less to save from, so your income's drop. This is what happens, this is called the paradox of thrift. So now the solution is very simple. People are trying to save more, so the government should cut taxes, which they've done, right? That, okay, you have more money on your hands, go and spend. The RBI cuts interest rates. So then you say, oh, what's the point of saving? I'm willing to spend more. So rather than saying, look, where did it start from? The thing is to say, what is being done to fix it?
But was there anything like NBFC tightening norms which may have impacted?
It could be, that could have been the start. So all of these would have come together. See, actually NBFCs is a point that
Does have any impact, you think, last year in terms of postponing capex? Could that have
but then the people should have come back and done. See, capex is very simple. People will do capex when there is demand. If people are sitting on idle capacity, nobody's going to do capex. So you first need to create demand. Capex will follow. There's no point trying to say this is the reason why Capex is not. If there is demand, people, you think about it, right? If you have a guy who has a taxi fleet, if there is demand for his cars, he won't buy a car. He'll buy a car, na? He will not buy.
Capex, did that also have
Government
some
Capex did slow down a little bit, but the point is, why did something else not pick up?
Understood.
Right? So yes, I mean, we can. it's very easy to say like this item slowed down. But the point I'm trying to make is they're interrelated.
Okay.
Right? The point I'm trying to make is they're interrelated. And even if this had slowed down, something else should have picked up. If I'm not spending money because my bonus has been cut, you should be spending money because right something should pick up. Right? So the point is you need to get it to pick up. Right? So but I'd also make one more point. I think going into last year, the expectations were too high, and we had been saying that even earlier. See, what happens is when the economy comes out of a slump, revenue growth is strong. You get not just revenue growth, because your capacity utilization improves, your margins also expand because your fixed costs get covered over a. So there's a phase when you're coming out of a slump where earnings growth, EPS growth is faster than revenue growth. The mistake that happens is people extrapolate that and say margins will keep on expanding. That doesn't happen because once your margins have peaked, then your revenue growth will follow, margins will stabilize or even dip a bit, and earnings will grow in line with it.
Growth projections were too optimistic.
So it's a mix of like, you coming out of COVID, people saw very strong revenue growth, expansion of margins, very high earnings growth consequently, and extrapolated that. So that to some extent that disappointment was predictable.
Right.
But now I think we are past that phase. Margins have come back a little bit to normal. So as revenue growth picks up, moderate earnings growth will follow.
Thank you. So Prateek, in context of the domestic picture that Anish has painted, right, I'd like to talk about, are there certain steps that you've seen the government, RBI take to revive demand? Do you see these steps to be sufficient? And also, are we seeing some initial signs of demand revival? I know these numbers have come out for the festival season and the ongoing wedding season. Do you think this demand revival is sustainable? What's your input on this?
So has the government done its bit? किया है, काफी किया है. So nobody expected them. So till now the government, every budget took money away. This was the first budget when they left some money for taxpayers. And then surprises of surprises, they did a GST cut, and that was substantial, not notional. So government has done its bit. RBI did its bit. So 1% repo rate cut. Now RBI is the most conservative regulator we have. They did one of 50 bits. So that was like the Jago Utho Kusto Hilo, and still it doesn't happen. I think there are a few things, unlike the past, people don't want to take loan. One big reason why companies changed hands was because the promoters or the companies were levered. Okay, तो अब एक बारी जल गए तो दूसरी बारी लोन लेना नहीं है. And if you look at the loan covenants, you give your personal guarantee, your wife's personal guarantee, your children's personal guarantee, you guarantee your house. Basically क्या है कि अगर आपने 3 महीने लोन नहीं चुकता किया तो you're on the road. भाई आदमी बोलता है मेरे पर 1000 करोड़ बैंक में है. Why should I do it? And at the same time, equity market, so to the extent market support, to the extent cash flow support, आपके बहुत सारे promoters होंगे, उनसे पूछ लेना. Nobody wants to take a loan. They have seen this as the single biggest cause that causes everything that they have done over 50 years of their life, 70 years of their life go away. So that confidence needs to be built is the biggest thing. दूसरा, आप जो बड़े absorption वाले प्रोजेक्ट होते हैं. So if we see 2000 to 2007 cycle, first government did the spending on roads, cash contract होते थे, फिर उसके बाद bought हुए, फिर उसके बाद it was ownership by the private sector. Now none of those projects saw the light at the end of it in time. All the mess happened. Everybody almost had to give away the projects. We again tried this time. Nobody is coming. So भाई, every action has a reaction. And आप एक बारी बोलते हैं हमने बहुत अच्छा किया, अगली बारी you have to give away much more to get the same animal spirits back. जो मैंने बोला कि भाई डिमांड आपको लानी है, जो पहले आप लेते हो ना, वो एक बार सोच के लो कि जो लिया है वो ठीक है, उस समय की जरूरत होगी, बट आपको बाद में उससे ज्यादा देना पड़ेगा. तो वी आर नॉट अ कंट्री विच एक्सेप्ट्स कि ओके, यू नो 6 is good, tomorrow 5.5 is good, and then 4% will be good. You want to keep accelerating, right? तो हमारे धंधे में भी होता है ना, अगर अपने को और अपना इनकम ग्रो करना है तो कीप परफॉर्मिंग. तो थोड़ी कह सकते कि पिछले साल हो गया. So is the problem. There is this loss of confidence,
Okay.
which also needs to be addressed apart from, of course, the demand issue that he spoke of.
Loss
And
of
yes,
confidence of the corporates in investing more.
again, if all the rights are with the bankers, so unless you are a startup and you haven't made your money first, मतलब आप सोचोगे कि मैं ये क्यों कर रहा हूँ. So most of the guys who are now making it big are new guys. It's not the earlier generation which has already made it big. उनके लिए it doesn't make sense to do it, go to a bank, borrow, risk everything again when you have this thing so fresh. Nobody talks of it. दिल्ली है इसलिए बोल दिया, शायद बात पहुंच जाए.
New age sectors.
हाँ, नहीं, न्यू एज सेक्टर तो जरिया हो गया, बट जो आपने बैंक्स को इतनी वो दे दी है, मतलब बेसिकली अगर एक आपसे वाकई में बिजनेस की भी भूल हो गई, तो आपका घर बार साहब, यू आर गॉन.
Yeah.
ऐसा थोड़ी होता है. वो आदमी कह रहा है यार मेरे 1000 बांटना पड़े, मैं क्यों करूँ. सो दिस इज दी अदर थिंग. एंड ऑफ कोर्स अगर आप पिछले साल से इस साल आते हो, तो फर्स्ट देयर वाज इलेक्शन, सो देयर वाज सम spending slowdown there. Second, you had a very good monsoons. In monsoons, demand falls. Third quarter, we thought some bit of it is reviving. Fourth quarter was slightly better. Now, second quarter this year, again, the monsoons have been very good and elongated. So, that impacts demand. मतलब और कुछ नहीं, तो आप कंस्ट्रक्शन नहीं कर सकते, AC नहीं चलाओगे, पावर डिमांड गिर जाती है. So, you know, those two categories straight away experience a fall. In spite of that, if you get an 8+ GDP growth, then something is definitely happening. Now, is it enough? Time will tell. But first signs are good. I think after the Q2 numbers, most businesses came in, painted a good picture for Q3. So let's say, keeping fingers crossed, it may be a start of good cycle starting.
Tahir, coming to you. Whatever changes RBI did, interest rate cut, GST rationalization, whatever has happened, are you seeing this translating into better corporate earnings? And more particularly, is the management outlook improving? What's your perspective on this?
So I would say clearly the expectation and to some extent the hope is definitely that we'll be having a cyclically better period in the next 4 to 6 quarters compared to what we've had in the last 4 quarters, and thanks to all the factors that you mentioned, which will all hopefully do its work.
Any specific sectors you are looking at which will drive the next
So there
leg
are
of earnings growth?
sure. So there are the one particular sector which has kind of had has had a K-shaped recovery since COVID, and that was consumption. When in some parts of consumption actually did well. Post-COVID, we know that the upper leg of the K actually did well because that is where we had relatively lesser loss of income, job losses were relatively less, and urban centers basically were able to hold up to their incomes, and therefore spending, when it came back with a vengeance out there. But the lower leg of the K, which was basically the mass consumption, the lower end of the income pyramid, had struggled for the last couple of years. But now the cycles are somewhat mean reverting. So we are seeing actually that the lower end of the income spectrum is starting to get better. Wages are starting to rise out there. You've seen couple of good monsoons, a very good monsoon this year. That's leading to improved incomes as well, or it's likely to lead to improved incomes as well. More importantly, I think inflation is got lower. So what's happening is that therefore your disposable income, especially for sensitive households, low income households which are very sensitive to inflation, is also got relatively better, and I think all this will therefore propel that. So we have that window where the next few quarters should have that cyclical opportunity where India accelerates on its growth path, within which again, so consumption is one, like as I said, should hopefully improve, especially the lower end of the case starts getting better. traditionally, even in the last, year or two, and even in the last phase of the of calendar year 2025, where there's been a visible, deceleration in activity. Of course, the GDP numbers bear out something different, but when you look at corporate earnings, it has been somewhat weaker. There have been sectors like, for example, healthcare. Talk about hospitals, for example, or clinics, and that part of the ecosystem, domestic pharma. There has been capital markets, of course, is a very large piece. All of us are part of that, whether it is wealth management, asset management, brokers, exchanges, financial savings. You talked about that. So that's another sector which is still very vibrant. It is growing well ahead of system rate of growth. And I don't see any reasons why that will kind of fall off the cliff. It can it kind of moderate. I think it was growing at 40, it is now going to grow at 20, which is still a very healthy growth.
And when you're interacting with various management, you see the outlook improving, optimism.
Getting better. So I would say that this quarter was somewhat better compared to the last 2 quarters, and that is something also which is a healthy sign. But it still needs to get a lot more broad based. I think there are a few pockets which are lagging, so we need to kind of do a little bit about that. I think public spending has slowed, particularly state level spending. Central government capex is still reasonably decent. It's revived after the election slowdown which happened last year. But state level, it's somewhat difficult given budgetary deficits are still out of control. Power is another place which is showing very vibrant growth, and that's thanks to building of data centers. General fact that in the last many years, power sector was a laggard and we didn't really invest as much. So even from a cyclical standpoint, it is showing very strong growth. There are parts of the power system ecosystem which we like a lot because they're going through some very structural changes. For example, transmission. Renewables is another part which is growing very well. There are some of these portions of the market. I was talking to somebody about consumer tech, consumer fintech, consumer tech. That's the fastest growing part of the Indian economy today. So I think there are good pockets of growth, but then there are a few laggards which also need to probably catch up. And I think that should be the mix which will hold out for the next some time.
Sure, thanks. So now we come to the third round, and I want brief answers. So Anish, 1 minute on market outlook and 1 minute on gold and silver. Gold's given some 65% return, silver's given some 73% return last 1 year. Is the rally sustainable?
So we have a simple methodology. If something's gone up a lot, we start trimming. But paradoxically, what happens is people start coming in after the rally is done. These days, I meet a lot of investors, and the way they ask is, my wife is saying that we should invest in gold. I said, boss, wife is not saying you want to invest after the thing is up, 300% or whatever. So look, there's no reason. Gold is there's no cash flow it generates, right? So it's always very difficult to value. In fact, somebody said gold will always have value because it's based on human stupidity, and stupidity will always be around. So it will always be valuable. No, but the point is, look, why has it gone up? Because central banks were buying gold. The point I'd make is they were shifting from dollars to gold. So now a large part of the shift is done, and so there's no. And also, I also say that the Chinese don't need to hold so much. My first answer which I gave, the Chinese don't need to hold so much reserves. Even I think India is holding too much reserves. So there's no need for us, the central banks, to hold so much gold. I think the gold. There's no point entering now. You can go slimmer at the. On the first point, I said as a market outlook, look, if the economic outlook is good, you should expect the earnings to be good. If earnings are good, it's fine. As Raju said, if you're a 3-year, 5-year investor and you started, if you want to be a long-term investor, FIIs will come in 3 times, they will go out 4 times. Forget about it, ignore it. Ultimately, what matters is earnings, and earnings follow the economy. So our view on the economy is that it should regain momentum, and therefore with a 3 to 5 year horizon you should invest.
Okay. Prateek, in continuation on earnings growth and market outlook, I want your inputs, particularly on the mid cap and small cap sector.
ओके नहीं थोड़ा सा अलग से करते हैं
ठीक है
मज़ा नहीं आएगा नहीं तो
अच्छा ठीक है
ये हमारी इन्वेस्टिंग लाइफ स्पैन में हमने 2 बार मैजिक होते हुए देखा
2 बार क्या होता है
मैजिक होते हुए देखा so one was in 90s when a new space called software happened and it created magic The next was in early 2000s when again a new space called private sector banks happened and 8 out of 10 created magic. मतलब जो आपने कंपाउंडिंग वहाँ देखी वो कहीं और नहीं देखी मतलब लंबे समय। तो अब आप सोचो कि क्या कॉम्बो था that increases the chances of magic to happen. There is nothing which is certain in our line. दोनों जगह ग्रोथ डिस्प्रोपोर्शनेटली हाई थी। अगर इंडेक्स 10-10 कर रहा है तो शायद 40-40, 50-50, सॉफ्टवेयर के टाइप पे तो शायद 100% और लंबे समय। दैट इज द कॉम्बो यू वांट। तो अगर आप आज का बाजार देखो तो unlike the past when in the 90s we were blessed with software and early 2000 we were blessed with private sector banks, one space, not too many. This is one time in history where many such young spaces have emerged. अभी ताहिर spoke of renewables, तो 5 साल पहले तो थी नहीं ना। EV से उसमें आप बातें कर लो, न्यू टेक जो बच्चे लोग आजकल करते हैं,
drones.
these were spaces which were not there. 5 years back there was no mutual fund listed.
Yes.
There was one hospital listed. Okay, so there are just so many spaces today which are happening all at once that we say this is time for alpha. अब तो क्या हुआ कि इन spaces में even the leaders are still mid or small. यंग स्पेस है, एक भी इलेक्ट्रॉनिक कंपनी लार्ज कैप नहीं है, एक भी कैपिटल मार्केट कंपनी, मतलब देश का सबसे बड़ा म्यूचुअल फंड भी अभी तक मिड कैप, अगली बार इलाज हो जाएगा बट अभी तक मिड है। सो इफ यू देन सी इफ ऑल ऑफ और मोस्ट ऑफ द हाई ग्रोथ स्पेसेस लाई इन मिड एंड स्मॉल एंड इफ यू आर अ ग्रोथ फोकस्ड गाइड तो आप क्या करोगे? ठीक है, सो डोंट लुक एट मिड कैप और लार्ज कैप और स्मॉल कैप। हमारा थॉट है ग्रोथ देखो, स्पेसेस देखो। अभी कोई चीज अगर 25 साल से मिड कैप है तो मेरा पहला ही फिल्टर है, देखना ही नहीं है। कोई चीज अगर लार्ज कैप से मिड कैप हो गई है तो मतलब क्यों ही देखोगे? जो स्मॉल से मिड हुई है, ग्रोथ चालू है आगे। सो आइडेंटिफाई स्पेसेस, डोंट गेट कॉट इन द कैप नैरेटिव। ओके, स्पेस के लीडर्स अगर अभी भी मिड हैं तो अभी क्या कर सकते हो आप? You won't let it be, no, unless you are a fund which is called a large cap fund. So that is what the thought is. Now, on the market, so one thing is, this is time for alpha for this reason. There are several of these spaces, so don't look at the index. ये अलग बात है कि पहले इंडेक्स ही चलेगा, बाद में ये सब चलेंगे। दूसरा जो थॉट है वो ये कि technically short term all of this we spoke of several positives which have happened during the year, tax cut, repo cut, GST cut, etc, liquidity increase and abroad as well. दो चीजें हमारे यहाँ थोड़ी डिफरेंट हुई हैं। एक, हमारे को ट्रेड डील नहीं मिली है, ओके, एंड अगर हम वहाँ पे दुकानदार खेलें, बोले कि यूएस के लिए अगर आप फूड बेचते हो, एनर्जी बेचते हो, डिफेंस बेचते हो तो हम सबसे बड़े ग्राहक हैं। हमारे लिए वो हैं सबसे बड़े ग्राहक, हमको पता है। You treat your biggest customer well, right? So chances of us having a good deal is good, but till it happens there is uncertainty and it may not happen also if the deal is not good. उस वजह से हम अटके हुए हैं। बाकी जगह भी डील से पहले मायूसी थी, डील के बाद तेजी आई। ये वन फैक्टर। सेकेंड इज इंडिया इज एक्सपीरियंसिंग वर्ल्ड्स हाईएस्ट फंड रेज एज अ परसेंटेज ऑफ मार्केट कैप।
IPOs and QIPs.
हाँ, तो पिछले साल भी बहुत हाई था, 3,90,000 करोड़। इस साल तो अक्टूबर तक 7 लाख करोड़ उड़ गया। टिपिकली व्हेन यू हैव सच हाई मनी रेज फ्रॉम द मार्केट, यू नो, अब ये दोनों भाई भी बोलेंगे कि हमको बेच के लेना पड़ता है, राइट? विद ऑल द फ्लोज द इंडस्ट्री इज गेटिंग, येट you know the subscription to NFOs is higher than the flows, right? तो उसकी वजह से भी कुछ हद तक markets trade in a band. It takes away a lot of steam and good because जो पहले आप एक साल पहले valuation की concern बता रहे थे वो आज बहुत कम हो गई। So going forward, I made this point in the first answer itself. As the things change marginally for the better, our thought is one should expect more good days rather than bad.
Okay, so optimism. Tahir, I want to ask you about oil. Brent crude has moved from some $73 to $62, fall of about 15%. Now there are projections going around that oil will go down to $30 in 2027, which is not very far away. So how are you reading this impact on India corporate earnings?
No, I think oil is a global commodity, and lower oil prices in general benefit the whole of the world in a way. India in particular, simply because we have been obviously more oil dependent, especially from we import a lot of our oil. But having said that, over the last some years, we've been noticing that India, in any case, even for India, our energy intensity or oil intensity of energy has actually been declining, thanks to renewables, thanks to the way many of our industries are actually consuming energy. So there is a clear observation that energy intensity is reducing. So I think we are in any case reaping the benefits of that. Besides, as it looks like today, and that some part of that is also visible across many other countries in the world as well, right? China and even parts of Europe who have embraced non-oil as a source of energy are obviously reducing their consumption of oil. And more importantly, US on the other side has actually become an exporter from it being a net importer of oil. So oil, from a dynamic perspective, more long term, I think it is looking to be on the downside. Even OPEC actually is not working now. I wouldn't be surprised if in the next few years OPEC itself kind of dismantles, because beyond a particular point, the first objective of controlling prices is not holding up anymore. So clearly beneficial in India more particularly because we are still, we have a number of industries which are still, directly or indirectly consuming oil. There will be, most of the industries which will benefit because there's energy usage in some form or the other, barring the services sector. I think everything from even pharmaceuticals to heavy engineering all use oil and oil derivatives. So I think that will help inflation, of course, for the rest of the world. In fact, that is also the reason why US is not worried about inflation post-tariffs, because they see some cushion in other parts of the inflation basket. So I think it's a very simple answer to that clearly oil will be beneficiary, except for the fact that there will be, this is more from a global standpoint and to some extent India, that there will be pockets of companies which are dependent on higher oil prices. They may probably have a somewhat difficult time. So let's think about upstream oil, or let's think about even some of the chemical commodity producers, because many of them are derivatives of oil prices. So if oil prices remain subdued, the whole value chain in terms of price levels remain subdued. So I think that is something which may probably have a somewhat tougher time. But by and large, I think there is more to gain than to lose, I would like to say.
So tailwind for the major part of the economy.
Absolutely. Yeah, I think for most of the economy, I think it should be a positive. I don't know whether you have anybody else.
नहीं, थोड़ा सा इसको अलग तरीके से
डाइसेक्ट कर सकते हो.
सो पहले लड़ाइयाँ तेल फील्ड पाने के लिए होती थी. तो जर्मनी went into Africa for oil, Middle East politics and all of that. अभी लड़ाइयाँ इसलिए होती हैं कि बेटा तू अपना तेल ग्राउंड में रख, मुझे बेच लेने दे. It's the huge change. We grew up thinking in 20 years the world will run out of oil.
Yeah.
अभी 55 के तो हो गए. Point is, now we know that it won't run out of oil. So the politics has changed completely. It is a commodity which will be left in the ground. So जो पहले एक fear था वो change हो गया.
But sorry. No, so just add one dimension. It also is that usually in the last few decades we've always found that oil is best if it is in a certain band. If it is say between 40 and 80 or 50 and 80, it works out very well for everybody on the planet. When it goes above 80, then there are countries like us which start suffering. And when it goes below 40, then there are a few other set of countries, whether there are certain Latin American economies, there are some African economies who get in, and Middle East, of course, to some extent, can get into trouble. So I think it's a commodity at the end of the day, but that band is shifting downwards. What was more like a 40-80 band is probably now likely to move to a 30-60 band in that sense.
So thank you all for your valuable insights.
Pleasure.
And
Thank you.
That brings us to the end of the panel discussion.